US customs authorities have reportedly banned imports from Smart Glove over alleged forced labour practices, Reuters reports, making it the fifth Malaysian firm to face such a ban in the past 15 months. Citing a statement by the US Customs and Border Protection, or CBP, Reuters said a withhold release order was issued based on reasonable evidence that indicates Smart Glove production facilities utilise forced labour. It said Smart Glove has not responded to a request for comment. In its statement, the CBP reportedly said its investigation identified 7 of the 11 forced labour indicators set out by the International Labour Organization at Smart Glove. However, it did not say which ones were found. The ILO indicators include excessive hours, debt bondage, physical and sexual violence, abusive working and living conditions. Last month, the US banned Supermax Corp over similar allegations. It also barred Top Glove Corp, though the ban was lifted last month after the company resolved the labour issues. Sime Darby Plantation and FGV Holdings have also been banned by the US in the past year over similar claims. Taiwan's largest warehousing infrastructure developer, Ally Logistic Property Co., or ALP, is reportedly set to invest $1 billion, or about 4.15 billion ringgit in Malaysia, to develop smart warehousing solutions. According to Bernama, the company said in a statement its plans in Malaysia are already underway, with the development of its $180 million 10.92 hectare logistics park with a smart warehousing facility called Omega in Bukit Raja, Selangor, the first of its kind in the country. ALP co-founder and CEO Charlie Chang reportedly said Malaysia's supply chain industry represents vast opportunities that are untapped, and large-scale investments and a sharing economy business model will see the industry boom. He was quoted as saying that ALP's Omega introduces collaborative operating models to unveil new economic opportunities and spur growth of the industry, while empowering local brands in their digital transformation journey to reach new markets and unlock wealth. The construction of Omega in Bukit Raja is expected to be completed in the first quarter of 2024. It will be part of ALP's regional chain of warehousing facility networks. In total, Omega smart warehouses across Malaysia are expected to generate about 3,000 jobs. Pharmaniaga has offered the Sinovac COVID-19 vaccine to the Ministry of Health as a booster shot. Group Managing Director Datuk Zulkarnain Muhammad Yusof said in a statement that the group is in the final stages of discussion with the National Pharmaceutical Regulatory Agency to register the vaccine as a booster shot and expects to get approval very soon. Once the agency gives the green light, he hopes Putrajaya will likewise allow the vaccine to be administered as a booster shot for Sinovac recipients. According to Zulkarnain, Pharmaniaga previously supplied more than 22 million doses to the ministry and the private sector, which means about 11 million recipients will require the booster shot. He highlighted that the Sinovac booster shot has been approved and used in China, Turkey, Chile, Indonesia and Cambodia, while 6 other countries are waiting for approval from their respective regulatory authority. He also noted that recent real-world study in Chile and an immunogenicity test done in Turkey show 3 doses of Sinovac is better than mixing different vaccines. Zulkarnain was responding to news reports yesterday that cited Johor DAP's Dr. Bu Cheng Ha as saying that at least 20% of Sinovac recipients reject Pfizer booster shots as they prefer the same vaccine for their third dose. Shares of Pharmaniaga slipped 0.62% to 80.5 cents today for a market capitalization of 1.05 billion ringgit. Malaysian Pacific Industries, or MPI, and Genetech Technology both saw their share prices hit 50 ringgit for the first time today to help Bursa Malaysia's technology index become the largest percentage gainer among the bourse gauges. This comes after the Nasdaq closed at its record high of 15,940.31 points overnight, as chipmaker stocks surged following Qualcomm's strong financial forecast and as investors digested the US Federal Reserve's Reserve's decision to taper its bond purchases. At the close, semiconductor manufacturer MPI's share price had pad gains at 48 ringgit 90 sen, after rising as much as 2 ringgit or 4.17% to 50 ringgit, while industrial automation specialist Genetec slipped to 48 ringgit 44 sen, after climbing as much as 32 sen or 0.64% to 50 ringgit. Both are constituents of the technology index, which settled about 1% higher this evening. Year to date, MPI and Genetec's share prices have risen substantially, with MPI rising from its closing price of 25 ringgit 50 sen on January 4th and Genetec climbing to present levels from 1 ringgit 80 sen. Felda will hold an EGM this coming December 2nd for holders of its 9.9 billion ringgit Islamic bonds or sukuk, which are guaranteed by the Malaysian government. This is according to a letter to the bondholders from the bond's trustee Amanah Raya Trustees. However, it did not specify the proposals for bondholders' consideration and approval during this EGM. It said the EGM will be held at 4 p.m. via video conferencing. Amanah Raya Trustees' letter indicated that Felda's EGM notice distribution list comprises 12 entities, including the EPF, QOP, Maybank and OCBC Bank Malaysia. News reports last Thursday, quoting a statement by Minister in the Prime Minister's Department Economy, Datuk Sri Mustafa Mohamad, reported that the Cabinet had agreed to approve the proposed issuance of Felda's sukuk worth 9.9 billion ringgit, with government guarantees for Felda's recovery plan. It was reported that the Cabinet had also agreed with the proposal to restructure Felda's debt with financial institutions. Mustafa reportedly said Felda's recovery plan will also involve efforts to increase its settlers' independence. According to Astro Awani, he said Felda's financial position should record a positive trend starting in 2023 with the implementation of these initiatives.